Welcome to Adda 24/7. We are in Cracker MCQ series BFM Module B, Risk and Banking Business. Up till now, we have covered ABM all the four modules and Module A of BFM. So presently we are in Module B, then we will be covering C, D, and then we will be covering retail also. So follow this series completely and thoroughly because this is very important series. Okay. Now coming to the point. Download Adda 24/7 app first on your mobile. In this app, you will be getting all the premium study material, current affairs, job alert, daily quizzes, subject quiz. You name it, you have it for CAIIB. And remember, December 2022 is your last exam with the current portion. So that's why do as much as possible immediately. Okay. See this. These videos, live lectures are available. Live lectures means live classes plus recorded videos. Means if you miss the class someday. Okay. Also subscribe to Officers Adda YouTube channel. In this channel you will be getting all the updates for CAIIB, and also this series, this Cracker series is going on Officers Adda only. So join this channel ASAP, subscribe to it, share it with your friends. Okay. This batch we have already started from October 3rd. Not many days have passed. Okay. So join this batch ASAP because again I am telling you, last portion December 2022, May 23, new portion, 4 subjects. I'll come to that later. Okay. And you can use this code also, Y432. This code will give you huge discounts, means almost 77 to 80% discounts. Okay. So go for that immediately. I'll show this later. Let's start the series. Yeah. Yesterday I asked you one question for homework. An investment will be more preferred and higher will be the reward to the investors when. So an investment will be more preferred, means when an investment will be more preferred, when the returns are high. Suppose if I ask you tomorrow, when in which project will you invest, you will definitely tell where the returns are high and risk is less. But that can't happen. Remember the logic. High returns, high risk, high returns. Low risk, low returns. Okay. There is never nothing in this world which is called as low risk and high returns. Anyone who tells you that okay it's like that, it's never that. Okay. Wherever you get high returns, there will definitely be a higher risk. So the investment will be more preferred and higher will be the reward to the investors when REROC is higher, REROC is lower, REROC is 1 and none of these. So what is the answer? Who can answer this fast? Yeah. Right? The REROC is higher. What is REROC? Risk adjusted return on capital. I'll write it over here. Okay. Risk adjusted return on capital. Okay. Return on capital. See here, return on capital you might be knowing, right? Return on capital you might be knowing, means whatever I invest, how much do I get back? So if I invest, let's say rupees 100 and I am getting at the end of the year let's say 20%. Okay. So I'll be getting what, 120. So that is return on capital. But what is risk adjusted? Risk adjusted means if this 100 rupees is in dollars, means I am investing in dollars, and then there is a exchange rate fluctuation. Okay, then this 120 rupees will be affected. That will be lesser. That can be lesser. I don't say will be lesser. That can be 115. Okay, because 5 rupees might go in this dollar fluctuation, dollar to rupee fluctuation might go. Okay, so this is risk adjusted. This is the adjustment of the risk. It can be various risks. It's not only forex. Okay, it's related to market risk, any other risk also. Okay, so that's the meaning of risk REROC. So when the REROC is higher, anybody will try to invest in that project only, isn't it? Next one. A banking book is generally not exposed to. Now what is banking book? Remember, in CAIIB you'll face this problem. There are 2 types of books. One is bank book and second is trading book. We will be focusing today mainly on this topic only, banking book and trading book. Okay. Banking book means there the assets are bought. Assets means basically I would say bonds. Okay. Bonds are bought and held till maturity. Okay. And here in trading book the bonds are bought and sold. They are bought for business. Okay. Yeah. So in banking book the banking book is generally not exposed to. See, if I hold anything up to maturity, I don't have to sell. Let's say you buy a tomorrow flat, and you are not concerned with the price. You are not going to sell it at all for next 50 years. So will the price of that flat affect you? Means liquidity risk, interest risk, credit risk, all of the above. Will this liquidity in the market or interest rate in the market? Interest rate means basically this will relate to price, because you might be knowing this bond formula. As the interest rate is higher, the price of the bond goes lower, right? So it's definitely interest rate risk is another name, you can call it as a price risk. So liquidity risk, price risk, credit risk. Credit risk means the other person, the party who is buying, does he have that much capability or will he default? That is meant by credit risk. Okay. So will any of these affect if I don't want to sell? I'm having that plot, I'm having that house, and I'm not going to sell. So how do I care whether you are going to pay me or not? Because I'm not going to sell it to you. How do I care whether the price of that flat is higher or lower? I'm not going to sell, right? So the price doesn't concern at all, right? Liquidity in the market means what is like the liquidity position in the market. Do people have money? I don't have to sell. So where is the liquidity concern now? Right? So banking book is generally not exposed to what? Because I'm holding it till maturity, long term I'm holding. Yeah. If I would have held this flat for selling, okay, then this would have been the problem, right? All these three. Means whether people will be giving me the right price, whether the other person will default, if I'm going to sell it, okay. So in the question over here is the banking book is generally not exposed to. So what is that? Liquidity, interest rate, credit, and answer is all of them. Quite obvious, isn't it? Next one. Which of the following are the characteristics of the assets held in the trading book? Okay. Now, right now we covered about banking book. Now it is trading book. So trading book means what? The bond is to be sold. I buy the flat for selling. I'm not keeping it till maturity. I'm buying it for business. So what are the characteristics of this thing which I have to sell? Okay. They are normally not held until maturity. Is this so? What did I tell you about the banking book? They are held up till maturity. And what about the trading book? They are not held up till maturity. So is A the answer? You type it now. B. They are normally held until maturity and accrual system of accounting is applied. Now this you might know that B is not the correct answer. Why? They are normally held until maturity. What is the trading book? They are not held up till maturity. A is the answer, though. So B is not the answer. But now I'll add one more point in this. Why? Because what is this accrual system of accounting? Although it's not part of this question, you can directly type that yeah, B is not the answer. Remaining answers you can check. But you must know as an accounting student or as a BFM student, you must know what is this accrual system and what is this other system. If this is accrual system, what is the other system? So understand the point. There are two accounting systems in this world. One is accrual system and second is cash system. Okay. Accrual means what? It records business transactions when they occur. Means, I'll tell you one simple example. When sale is made, when bill is received, means what? Sale is made. Suppose me and you are transacting. I sell you something. I sell you the refrigerator today. Okay. But you are not paying me now. I am selling you on credit. So under accrual system, I'll record it immediately. One refrigerator sold for let's say 20,000 rupees. Okay. So under accrual system, I'll get it that yes, my fridge is sold and 20,000 I will be receiving from you. But cash system is different. Records transaction only when the cash is received or paid. This is the best system, right? I am selling you this refrigerator, but if you don't pay me then? So when the clients pay for the product or services, when the bills are paid. Got it? Complies with GAAP, generally accepted accounting principles. These are used worldwide now. They were found by USA, but used worldwide now. Only used for very small businesses. Cash system. Cannot match revenue against expenses in the accounting period. Correct. So revenue against expenses won't be matched over here, and this presents accurate financial picture. This accrual system. Okay. So You understood by now? Accrual system means the transaction is recorded when it is made, not when the cash is received. But in cash system, transaction is recorded when the cash is actually received. Okay, I'll record the sale of my refrigerator only when you pay me. If you don't pay me, I will not record the sale of the refrigerator. Okay, so that is the point. Coming back, so they are held until maturity, and accrual system of accounting is applied. Is B the answer? Mark to market system is followed. So is C the answer or is D? Both A and C. What do you say, guys? Fast, fast, fast. Okay. What is mark to market system? Mark to market system means the prices of the bonds are revalued after a given period, every given period. It can be every week, it can be after 15 days, anything. It's like that the flat which you hold. Okay, if you are going to sell it, then mark to market means what? Whether the flat is being sold right now at 40 lakhs, or next month is it going to be sold at 42 lakhs, or is it going to be sold at 38 lakhs, means how much the people are going to pay, and what is the actual cost in the of that flat in the market. Same with the case of the bond also. How much is the cost of the bond in the market, depending on the interest rate risk. See, interest rate and bond prices are inverse. Okay, bond theorem. Interest rate means asking rate. Interest rate rises, bond prices fall down. Okay, price goes down, and vice versa, reverse thing. Okay, so what is the answer over here now? Say this, B is not the answer. They are not held up to maturity. That's the correct answer. And mark to market is applied. That is also correct answer. So the answer is D. Okay, got it? Trading book is mainly exposed to. So trading book means what? Just you might be knowing by now. Trading book is what is to be sold immediately in the market. So they are subject to what? Market risk, means whatever are the forces of the market. Market risk means, generally remember, this risk is not in your hands. Okay. Operations risk, yeah, it can be subject to that also. Means how much my employees are working, are they working better, or are they making any mistake, or are my systems correct? So this trading book will be subject to that also. Yes, remember, here we are talking of the bonds, okay, which the bank purchases. So your operation risk will also affect the trading book. And next is the credit risk. Credit risk means whether the other party is going to pay me or not, right? So that is the credit risk. So which are the types of risks that is subject to, that are enforced on the trading book? So market risk, operations, credit, and all of the above. So what is the correct answer? It can be, see here, all of them are applicable. So the correct answer will definitely be D. Okay, D. The transactions related to guarantees, LCs, committed or backup credit lines form the part of. So what is this? What are all these? Firstly, understand that. What is this guarantees, LCs? Okay, let's look at these two parts only. This credit lines is a separate part. This is similar to that of the guarantees. Remember, credit lines and guarantees are similar, I would say, not same, similar. Okay, so I'll first explain you guarantees and LCs. Okay, guarantees means what? I guarantee on your behalf to somebody else that this person will work properly. Okay, that's guarantee. So this guarantee will come to me if you don't work properly. That third person will come to me, right? If you take a guarantor on a loan, when will you go to the guarantor? Only when the principal party doesn't pay, isn't it? So does this guarantee come in the does it directly affect this guarantor's books? No, it will affect if the primary party doesn't pay. So this is a off balance sheet item. Okay, similarly LC, if I give you the LC, I don't have to pay you immediately. And in balance sheet, remember, they are always those transactions which are paid immediately as on date. Okay, those are recorded. So coming back, and what are these credit lines? See, this credit lines are generally given by banks to various other banks. Bigger banks give these credit lines. These credit lines are given to countries separately. These credit lines are given to individual customers separately. These credit lines are given by the government also to various other governments. Means it's a type of loan. this much amount of transactions you can do with us without paying us. Okay, you can pay us on on credit. That's meant by credit line. Okay. Okay. So the transactions related to guarantees, LCs, committed or backup credit lines form a part of banking book, trading book, off balance sheet exposures, and all of these. So it forms a part of what? Yeah. What is the answer, guys? A, B, C. Just now I told you something about guarantees. Okay. So that is the same answer. Answer is C. Off balance sheet exposure. All these are off balance sheet exposures. Got it? Now one question for the homework. The liquidity risk of the banks arises from. So liquidity risk in any bank will arise when will the, what do you mean by liquidity risk? Liquidity risk means here there are two parts always. I'll just give you the explanation of this. I won't give you the answer. Okay. There are liabilities and there are assets. Okay, in any bank, right? So liquidity risk means if I am having, let's say, 100 rupees of assets and liabilities are, let's say, 200, means liabilities means deposits, 200 deposits and only 100 rupees assets. So when I am earning from these assets and paying to the liability holders, okay, so that can be the problem. Is this the problem? Second case, if I am holding 100 rupees liabilities and 200 rupees assets, means I have more loans. Loans are more. I am giving you the question over here. I have more loans and less deposits. Okay, deposits 100 and loans more. And here deposits 200, so assets more means loans less. Okay, so when will I face the liquidity risk in this case? Either in case number 1 or case number 2. So that is the basic question. The liquidity risk of the banks arises from funding of long-term assets by short-term liabilities. Long-term assets means the loan is of, let's say, 3 years and the liabilities means deposits are of 1 year. If I take a deposit of 1 year and give the loan of 3 years, then I'll be facing the liquidity risk. Or funding of short-term assets by long-term liabilities. I take the deposit of 3 years and give the loan of 1 year, then will I face the liquidity risk. Funding of long-term liabilities by long-term short-term assets. Okay, so will I face it in the third case or none of these? So that's what you have to answer. Tomorrow I'll answer the question. Okay, before going, see this, October 3rd batch is already started. We'll be covering all the numericals, objective questions, theories, case studies, everything is covered in this. Okay, use the code Y432. Now how to use the code, I'll show you that also. Let's go live on Adda 24/7. See this, go to Adda 24/7. On Adda 24/7, click on JAIIB and CAIIB. Once you click over there, you'll see the Mahapack and see these two things you'll see. JAIIB, CAIIB, Mahapack and November, December English batch. Click on the English batch. You can click on Mahapack also. Mahapack gives you, it's like that OTT subscription. Whatever batches come to you within this validity will be applied to you. Okay, means you'll get all the batches. So it's one all in one course. Okay, you can click over here also. I'll show you about this English batch. Click on the English batch. See this. Click on this October 3rd batch. Now you'll see the details. You can read the details at your ease. Read it completely. I'll just give you a few hints about this. 180 plus hours of live interactive classes. Ebooks for regular intensive practice. Subject-wise expertise. 24/7 recorded videos. So see this, recorded videos are very important. Why? Because what happens, suppose if you miss some classes due to your bank pressure, okay, so next time you can definitely get it at the night, late night, tomorrow morning you can definitely go for these recorded videos. Okay, and importantly, this is for December 2022 exam. May 23 new exam, new portion. So focus on this completely. Why am I always stressing on this December exam? I'll show you now. Okay, so look at the fees now. 17,999. Click on the view offers. Once you click on view offers, look at the code Y432. Put the code. Click on apply. Now see this, 77% off. My God, 17,999 reduces to 4,139. Means such is the huge discount. Go for it. It's an investment for lifetime. Once you clear CAIIB, this amount you will recover within hardly 4 to 5 months. Okay. Now I'll show you why am I stressing on December 2022 exam. See this. If you go to the same slide, I'll show you again. Yeah. See this. If you see the March 23 portion, see this. Right now, how many papers are you having? ABM and BFM, compulsory ones. In March 23, the papers will be ABM, BFM, ABFM, and BRBL, means Banking Regulations and Banking Business Laws. Now, these two papers will be additional. As of now, you are facing the problem in ABM and BFM. Most of the students are crying, these are very tough. Now, imagine these two tough will be there and two more will be there. So why do you wait for May 23? Go for it immediately. Clear it by December only. Also, one more problem is there. Two more problems are there. I'll tell you that. One is the elective. Presently, the elective which you are choosing is generally 99% students choose this retail only. Okay. Now the retail elective is not there from May 23. Okay. Rural, IT, risk, then this credit. Okay. Means difficult ones are there. So that's why clear the exam immediately by December only. Don't wait for May 23. Also, there is one more, that is negative marking. Negative marking is there in May 23. Remember, negative marking at 25%. Okay, at 25% means if the question is of 2 marks, okay, then you will get a negative marking of 0.5 marks. Okay, remember May 23 new exam, everything is new. I have covered a separate video on this. On Officers Adda 24/7 YouTube channel. That's why I'm saying subscribe to it. Okay. So I'll stop over here. Tomorrow I'll be back with another series. Till then, bye.